back to Housing Happenings with Holly, and I'm so lucky to have with me three fantastic guests: Adam Dahlberg with 72 Sold, Hague Partners, Ryan Nelson, AmeriFirst Financial, and of course Sarah Perkins with Clear Title. So welcome.
Hello, hello.
Thanks, Holly.
Another week back.
Another week back.
Excited to be here.
That's great. So why don't you guys introduce yourselves and we can start rolling. How was your weekend?
Yeah, so this is Adam Dahlberg with Hague Partners and 72 Sold. Agent with them, been in the business, about 10 years maybe, I guess. I've been with Hague for a couple, but started working in real estate back in the early 2000s. Yeah, it's been an interesting week. It's I'll tell you, real estate is one of those things that every day it's something different. That's why we like it, right? I mean, if it was a monotonous type job, it'd get boring and it just wouldn't be for anybody at this table. But this week has been, it's been good. You know, we had the rollover from October to November. And so at the end of the month, at the beginning of the month, we always have things that are, closing and things that are scheduled. Most of them have closed. There's a couple delays on some things that were unforeseen, but we got through them and I think we're going to be just fine.
Absolutely. Yeah. So we're a good team. And this week we just rolled out that we're expanding our team and we're going to do pods. So
yeah, the new pod structure is going to be fantastic. Yeah, it really plays on everybody's strengths, and any other agents out that happen to hear this, I think it's a great a model to follow, especially in a growing type setting. Everybody that is that's in real estate, they tend to be good at one or two or maybe three things. As a realtor, you wear a lot of hats, right? You have to know about marketing. You have to know how to get business. You have to know how to, convince clients why to go with you, and then how to market that home, how to do a lot of administrative paperwork and things that, most outgoing type salespeople just loathe. I can attest to that. If I'm behind a computer screen for more than 20 minutes, I'm going to pull my eyeballs out. The most dull item I can find. So, when you're a one hat wearing person, you're very limited on the amount of business you can do, but more importantly, you're limited on the amount of attention that you can give your clients. And it just doesn't really serve them well to be a very busy agent and have to wear, all of those caps. So this new pod structure, Holly and I have worked together for a long time. Obviously, people that are extended within our team, Sarah on the title side and Ryan on the lending side, and our transaction people. Now we've kind of put those together almost like a SEAL Team 6. That's what I refer to us as, right? So within our team, we have these pods, but I look at our pod in particular as probably it's going to be the killer pod, right? Absolutely. We're the one that we're going to go in and find Osama bin Laden, right? We're going to go hunt down those deals.
Right. And another great thing about what we do is agents we'll have a concierge who will be always in touch with our clients. And then I'll be focusing and Adam on closing the deals as well as getting the best price and working with our support teams. Ryan, tell us about what's happening in the loan and money and the feds.
Well, we're getting towards the end of the year, so we're still waiting for more economic data to come out to show inflation slowing. So the Federal Reserve is going to be increasing rates again, another 0.75%. So we'll be up 3.5% this year. And the whole goal again is to take dollars out of the economy. Inflation happens when you have too many dollars chasing too few goods. So cost of borrowing going up is one of the Fed's tools they have to slow down the economy and try to get prices to come back down by people spending less. And so making the cost of borrowing money more difficult is certainly accomplishing that goal in the real estate industry right now. We've seen, really things come to a pretty abrupt halt over the last few months as rates continue to rise. So it's definitely a good time to buy because rates should be coming back down as soon as the Fed's tools get in place and we start to see some, relief from what they're doing and start to see prices come down and inflation start to slow, which is good. There's great tools in the lending world to help, combat some of these buyer challenges that people have in regards to their payment being too high with different buy down strategies. I talked about that on the team call on Friday, and it got a really good response. Doing a temporary buy down is a phenomenal tool, and for somebody selling their home, it's a great option.
How does that work?
Well, basically, you're getting an interest rate on a loan at whatever the rate is today. So if that's 7%, if you do a 3-2-1 buy down, you're getting a 3% interest rate on the loan for the first year. So it's a 4%. The next year is at 5%. The next year after that's a 6%, and then you're at your note rate, which is the current rate. So it's a great thing for someone that's wants to have a lower payment now, anticipates rates to come back down. And alternatively, it's good for a seller. Instead of having to reduce the price more, they can simply offer up something that's enticing to get a buyer to want to purchase their home by, offering something unique and different, and finding it a very attractive option for people right now. So, prices are very attractive for buyers right now, and even though rates are higher, it's still a great opportunity to be able to make a move on real estate. So it's becoming increasingly more attractive, and I think we're going to start seeing the rates peak out over the next few months and start to beginning of 2023 you start to have a gradual descent back down to more attractive levels in the 6s and high 5s. So that's what we're all hoping for, but certainly a phenomenal time to buy something now at much cheaper prices and a lot more attractive than it's been. And with the buy down strategy, your payment can be substantially lower. So
what would be like, just like a numbers example? Let's say on a $500,000 home, if you were at a current rate of, where are we at now? 7.5?
Yeah, right around 7 to 7.5.
7.
Range.
If you were to do, let's say, a 1% or a 2% or a point, I guess, buy down, how would that affect the payment numbers?
Well, on a $400,000 loan, the 1% in interest rate's about $250 a month less.
Okay.
So
That's big.
yeah,
Every single month.
every single month.
Yeah.
So on a 3-2-1 buy down for the first year, their payment's $750, lower than what it would be if they didn't do that. I found it very beneficial for people to really get them to get off the fence and say, this is a good option for me. And the greatest thing about it is all that money that's set aside to subsidize the interest rate, which comes from the seller in doing a buy down. If the house is sold or refinanced because rates come down to get a permanent better rate, then that money goes towards a principal reduction on the loan, and comes off the balance. So it's their money.
Oh, that's good to know. Yeah, so it doesn't go to waste, right? If all of a sudden things go crazy next year and it goes down to 3%, that rate buy down doesn't go away.
Nope.
Or the money for it, I guess, rather. Interesting. So $250 per month?
Approximately, yeah.
Wow.
Right
Per
in that ballpark.
percentage point.
I mean, that makes a difference between having to get a roommate and rent one of your rooms out just to be able to afford your house.
It's true. And you think about it, that really does address the biggest challenge we're facing right now. And it's been the speed of the change, and it's been the magnitude of the change when we're seeing the movement in what we've seen with mortgage rates. And so this really does address it in a way that's saying, hey, you don't like this? We can give you another option, and it does address the payments. Because what is it? You date who do you marry and
You
date?
date the rate, marry the home,
That's it.
divorce the rent.
And it's more safe now than it was, say, back in 03, 04 when, people were doing ARMs, right? This isn't an ARM type loan, right? You still have to qualify for the higher amount. Whereas, back then, I think people only qualified for the interest only or the lower ARM amount. Is that what got people into trouble back in,
That was a culmination of many different things. Primarily people qualifying for homes that couldn't afford it in the first place.
Yeah. What was that called? No stated income loans?
Right.
Stated income,
Pick your
stated asset,
payment.
Bartenders and hairdressers had like 3 investment properties.
negative
and-
amortization.
Yeah, there was a lot of things there happening. But
Yeah,
we're not going to face that, right? You're not thinking that there isn't some huge, big crash coming like it did,
Well, one of the
back in the
things when we look at that, and I know you can piggyback on this, is there were banks that were doing 120% loans. Nobody's doing 120% loans. People have to have equity. The situation of where our borrowers are today is so much stronger than the situation that we had before. and we were dealing with some challenges with fraud, and we were dealing with some, false demand, and, so it is a very, like, fundamentally, the things are so different that from then. But today, when we're still looking at it, and so that's why these products and these programs are so much safer, is people have to be better borrowers. And I mean, I'm shoving my face in this when this is Ryan's wheelhouse, but, it's such a different environment than back then that it's very difficult to really compare. It feels similar with the emotional side, but it's not a good idea to make decisions with your emotions.
Mm-hmm.
Right. And the other great thing with the information you're giving, Ryan, it's like things that Adam and I use, whether we're working with sellers or buyers. If we're working with sellers, we use that information and we help address and descriptions of how we're marketing the home, that our home can qualify for
for the buy down stuff. And there's some creative ways to market that property that isn't just having to do price drops. There's certain times when you can go to a seller that we're working with and they're going, oh my gosh, they think that it's doomsday and they have to drop $50,000 to get their home sold. Well, let's look at the information. Let's look at what's selling. Let's look at the competition. There might be a better way to maybe, would you, I've asked to sell this before. I go, would you spend $20,000 to save 50? They said, what do you mean? I'm like, if we offered $20,000 as a concession that they can use to buy down the rate, that might incentivize a buyer better than dropping the price by 50 grand and taking that off the table. Because if you look at the numbers and you do the math, you might have to take it down that $50,000, $60,000 to equal that same payment amount if you were to just do a rate buy down and try to, go at it a different way with a different strategy, knowing that the interest rates will probably go down in the next couple of years when inflation, gets better, I guess, or is brought back to normality.
Well, the first thing really, right now, we're in a temporary state. We're in a temporary state where rates are elevated, emotions are high. What I've told a lot of, real estate partners and people that are asking me about a buy down or, how do I best market that with the property? And really, it's not about so much marketing it as just education. If I'm a real estate agent and someone approaches me and wants to, is interested in my home, okay, because the price is going to be the first thing. Obviously, it's got to be priced right. That's what you guys do. You know that side of it. The why and the how, and this is where the comps are at, and this is where we're going to start marketing the property at. But really, it comes down to simple education of, once you have someone interested in your property, okay, you have to be very detailed. You have to know, what a buy down will do, what the payment difference is, and you have to just educate that person who's interested in your home. You have to educate their real estate agent on, hey, this is what my seller is willing to do to make it affordable for that buyer right now.
Totally agree.
They're willing to, offer some buy down points. This is what it'll do for the payment, and share that and get that seller, get that buyer's agent, understanding what a phenomenal option this is to save their buyer money, and that's not something you can really put in some sort of advertising that really articulates the benefit of it. So it's really a belly-to-belly conversation between you and a potential buyer's agent to get them as excited about the opportunity as we have before us. And it's a great strategy. I mean, getting, affordability is the number one challenge we have right now. House prices, although they're coming down a little bit, they're still at way elevated levels compared to where they've been. And so you have to be able to offer up something that's going to get people to see the benefit. And that really is just a one-on-one conversation, educating that buyer's agent on what your seller's willing to do to play ball, to be able to help, get someone into that home and what the true benefit is.
Totally agree. And that comes back to the same skill as being able to read the situation. Adam and I were in a situation this week with a house that we had in Mesa where the deal was possibly going to fall apart. And Adam and I together were able to talk to the buyer's agent, ended up being the same person, and be able to put that deal back together because of that information.
And it also, goes back to how important it is to have a good lender. Not a lot of lenders understand what you're talking about to the depth that they should. And, it's great to have a understanding buyer's agent that can explain those things. But when they're speaking with, the person who's doing the funding for them, that lender can let them know, hey, here's what you qualify for at this rate. Here's what you qualify for at another rate. Here's what your difference in prices would be. And it could help that buyer and the agent as well to go in and maybe negotiate a deal where they might not even look at a home that's at $450 or $460 because it's just too expensive, where instead of, just eliminating those homes from the search, can actually have that conversation with the selling agent and go, look, we could probably afford this home at $450, but we're going to need some help on the back end, instead of just cutting that house off. And now you might have 4 options in the neighborhood that you can buy. Whereas if you were to expand your search by another $20,000 or $50,000, it enters a whole nother plane of homes that your buyer might have access to, and just getting creative on the back end with that. Is that right? I mean,
totally agree.
Yeah. So make sure you're teaming up with people like Ryan, or just call Ryan. Hey, by the way, you shared, I believe, in our team meeting, or I think I saw it. It was a calculator. I don't know. Was it a spreadsheet that you could put in the information?
Yeah, it's a simple spreadsheet. You input the purchase price of the property, the loan amount, the interest rate, does all the work, tells you exactly how much you need in seller concessions to do a 2-1 buy down, which is 2% lower the first year and then 1% lower the second year. Mm-hmm. Or do a 3-2-1 where you get 3%, 2%, and 1% lower. So it calculates everything for you, tells you exactly how much money you need. If you're a real estate agent and you want to offer a buy down on a property, the first thing you need to do is obviously have a discussion with your seller and say, look, here's a tool, here's something that's becoming increasingly popular, as affordability is still a challenge for a lot of people. This is an attractive option to give people a huge incentive to want to buy, and to want to buy your particular property because you're willing to offer up those seller concessions to be able to pay this person to buy your home, this buyer, and you're paying their interest rate difference, for a certain period of time. And I've found that, that's becoming an increasingly popular option versus a price reduction. Because a lot of times with the price reduction, it still won't get a buyer to say yes, because that payment is still very, very high. A 1%, every $10,000 that a price gets lowered or a loan amount gets lowered and $10,000 less financed, typically only reduces the monthly payment about $75. So, $10,000 can go a long ways and may completely cover a 2-1 buy down.
I like that.
So if you're able to offer some sort of buy down strategy, and typically on a 3-2-1, you need about 3.5% to 4% in seller concessions, of the actual purchase price, to be able to offer that up and consummate that, and make that work. Where in a 2-down buy down, you need anywhere around 2%. So it's not that much, but compared to what I've seen with price reductions, can be massive. Sometimes you see people lowering prices $25,000 in one whack on a house that's priced at $500,000. That's a full 5%.
Yeah.
Right.
And, that'll cover a 3-2-1 buy down, plus some, and give this, potential buyers some money towards closing costs.
Yeah.
And they're going to be a lot more apt to say yes than paying $25,000 less when their payment's substantially lower. So, looking at what is important to buyers and what's going to get them to say yes and want to be able to purchase that home is really how you're going to solve the affordability issue. And I had a client the other day that, young couple about to be married. She's a pharmacist and he's in pharmacy school, and he's an apprentice pharmacist. So he's not making a lot of money, but he's going to be graduating in the next 6 months. He's going to be making a lot more money. She makes 6 figures a year, and he's going to be in that same ballpark. So right now, this was exactly what they wanted to hear is, wow, okay, so we could get in now and our payments would be, $700-800 a month less. And then, we don't have to worry so much about it because our income's going to be increasing dramatically once he finishes school. So it's really just understanding that, and more than anything, I think just having that belly to belly conversation with some agent that brings a potential buyer, it's super important to understand what's important to them and see how you can best solve those issues.
And it brings up a good point too with agents that have the representing sellers, listing agents, is to have those deep conversations with the buyer agent and form that relationship and have that open line of communication and figure out really what is it with your buyer that they're looking for that's important to the buyer, especially when they come in with offers. I mean, all the time right now, buyers are so far ahead of the curve than sellers are at the moment when it comes to pricing. And, buyers see all of these other options out there and they're just throwing out, offers on 3, 4, 5 homes at a time and just seeing what they can negotiate down to the best that works for them. And I would say 9 out of 10 agents just think that it's all about price, and it's not all about price. It's about what's important to them. What do they need? Are they throwing out a $50,000 below listing price offer because that's just the kind of person they are and they feel like they have to win? Or is that really the only price that would make sense for them? And kind of going back to the previous comment, could a selling agent work with the buyer's agent and formulate an understanding of what's important to that buyer and what they need, and save that seller $20,000, $30,000, $40,000 maybe, and go, look, is it just the payment? Let's work with the lender. Let's figure out what we can contribute in the form of concessions. Keep the price, where we're at, because it's a good price. It's a realistic price for that home, but offer some concessions over to them to help that rate buy down and understand what their situation is. Are they in school? Are they about to graduate in a year? Did they just come out of maybe some rough, personal issue, divorce or bankruptcy or something, and this is all they can do for now, but they can see some potential in them. And so having the agents work together as a team instead of me versus you, right? It's not red versus blue. And a lot of times agents feel that that's really what it is. Like, I'm working for my client to get them the best price for their home, and you're the enemy. And then they're thinking the other side, my job's to drill this guy down and get him as low as we can. If we could come together and work as a team to accomplish the mission of getting this house closed and figure out what's best for both parties and come to terms on that by having the knowledge and having some strategy on how to do that, that's what makes a winning situation. And that's
one thing that Adam and I do a lot of. And even with our new pod structure where we're doing listings, and then even when we're doing showings, we have one of us there during the showings. We're bringing more buyers in at the same time, so we're able to meet the different agents and talk to them and meet their clients. So that's been working well.
Yeah.
And what it really allows you to address is basically the major one thing that impacts all of our markets: consumer sentiment. It's about having those conversations and getting out there so people realize that there are options, because there's so much clickbait and there's so much garbage out there about how the sky is falling. The sky's not actually falling. Things are normalizing, and we got to get through some of our, growing pains or calming down pains just because of the unsustainable market that we were in, that we have left, and now we're normalizing, which is all ultimately a healthy process. But making sure the consumers know that they have options, both buyers and sellers. This is not a terrible time to be a seller. This is not a terrible time to be a buyer, contrary to what you may see on some of these thumbnails on YouTube or social media. So that's why talking to an expert, having these conversations and saying and working, like you said, Adam, it's not we're against each other. It's we're working together for the best, for the best situation or solution for all of the clients, because ultimately, in order to have a healthy market, we need to have buyers and sellers that are willing to work together.
Yeah. Totally. Yeah. And really it is in the best interest of our clients, whether you're representing the buyers or the sellers. You are entrusted to look out for them in their best possible interest. It's not about, how much more can we grind out in commissions, or, I want my buyer to win no matter what. That becomes personal. That's a personality trait that you have to get rid of. In this business, it's about, we are being commissioned by a client to represent them in the best possible way. And sometimes that's not always about just grinding down the seller to get the cheapest price for the home. It's about accomplishing what's important to them. And, I came from the kind of the investment world in real estate. And most of the things that I did was all off market, homes. I probably sold 12, 15 homes a year traditionally, for clients. But we did hundreds a year in off-market, quick cash. This was before the iBuyers, kind of became popular and so on and so forth. So, there was always that negative sentiment like, oh, they're just, low ballers. They just go in and grind. Well, in a way, but we didn't look at it in that perspective. It was really about trying to provide a service for a client that they just didn't have any other option. They had a home that was, it was a liability for them, whether they inherited that home. I mean, it was the old broken down rusty car that's been sitting on the side of the house that the wheels are missing and the engine's been ripped apart. What are you going to do? I mean, you got to get rid of it somehow, right? So if we were to come in and say, look, there's no other option, but here's the risks that we're going to take. We're going to make this problem go away for you. And we're going to make a little bit of a profit on the back end that could take us 4 to 6 months to realize by the time we fix that home up and improve it. And not only that, but improving the neighbors around you. We don't want to be the ugly duckling on the street, neither do your neighbors. So if we can give you a fair price for this home, knowing that our goal is, to make a little bit of profit on the back end, show you what those numbers are, and you're okay with that, how is that a negative thing? Pawn shops exist for a reason, right? It's not because they're, scum of the earth, but every once in a while you need to go there and hawk some tools that just you don't care about anymore. You don't need them. And so that's the kind of service we provided. Now, the point I was making with that is, for real estate agents, they always thought that we were just kind of scum of the earth because all we did was go in there and, Zillow said the house is worth $300,000 and we offered them $200,000 because we were going to take on the risk and put in 40 or 50 grand in rehab and have to resell it and pay those fees and so on and so forth and carry the home over time and pay insurance and utilities and interest payments and so on and so forth. And maybe we scrape out a $10,000 or $15,000 profit. But to them, that didn't make sense because they could have just put it on the market and sold it for $300,000. Well, you can't. And more importantly, they're not getting into the head of their client, into their seller. What is important for them? What's the most important thing for them? They just want this thing to go away. They don't need another 3 or 4 or 5 months of this house sitting on the market, not selling, having to whip out the credit cards and borrow money from family and have to fire contractors and rehire new contractors because they didn't show up. And then, now you go fast forward 3 or 4 months and who knows where the market's going to be and if they can even sell that house at all. Or do you want to check in 2 weeks and you make this whole thing go away? And a lot of people just go, I just want it to go away. I just want to be done with it. So it's important for us as agents now to understand what our clients are looking for on the buyer side or on the selling side, and then try to formulate a game plan to get them across whatever finish line they're trying to get across. And so by working together as buyer and seller agents, representing our clients separately, but the common goal as a whole, and then formulating as experts a plan to get there, that's what's important. That's the team structure. And that other side of the equation is also part of your team, whether they're the buyer or the selling agent. Is that a rant? That was a rant.
That was good. The other thing I wanted to share is what Adam's saying is, yes, it's good to be the priority of your clients. And I think Ryan and Sarah are also saying that. But also, like me coming as being a mom, I always wanted to make sure that we're taking care of people with their feelings and what's best for their needs and their family and their lifestyle.
Housing's so personal.
It is. And sometimes at one point, some of the companies were trying to turn it into being a robot. And we're not. This is about whatever is difficult for you, we're a one-stop shop. We've got different contacts, like a concierge service, where we could help you pack, or we could help you get it cleaned or organized, or make it move as less stressful than it would be. Mm-hmm. And we try to have good communication and be available.
And people need people. I mean, I always want to go back to this thing is we are humans. We like people. We want to work with people. And there are certain things that, like you said, a robot or an app cannot accomplish. And so the details and the things that our realtors walk us through and take care of for us, right, that's a gigantic service. And you think about, and even going back to the pod thing, when we're in an environment where things do take a little bit longer, things are a little bit more complicated, it's all about the customer service and knowing that you have people that are there. And so I think moving into this arena, you already had great customer service. It's just going to allow you to take care of your clients even better.
Right, which they need, because there's more anxiety, like Adam was saying, and more different stresses, and we're there to focus and have the manpower to do that.
Yeah. I think nowadays, it's the teams that are going to win, right? It's the team structures that are going to be the most successful in real estate. You'll always have those individual agents that, try to do everything on their own, and they're happy doing their 1 or 2 deals a month, maybe a couple more if they can. But once you get to about 3 to 4 deals as an individual agent, you're overwhelmed. It's just the amount of things that you have to do these days to adequately market, sell, and do all the admin things on a home it's a lot. It's a lot more than I think people feel is there, right? So, when I was doing the investment side, agents to me, I was like, oh man, real estate agents, they just make so much money doing nothing. And then until you really get into it, you're like, man, there's a lot of emotional and physical stresses that come with this job.
Absolutely.
And timing, especially if you're working with buyers. Oh my goodness, like just the hours and hours and the hundreds of dollars in just gas money driving around.
But it's such a good feeling when you get them into a home and they have their family there, and this is where they're going to create memories. And that's a big win for us.
Right. So when you get too big, when you have more than just a couple deals going on, you can't dedicate the time that's necessary to really give that best service, that 5-star quality service to those clients. And so that's why we are now going with this pod structure where it's a very centralized duty. Here is your, this is the person that you're going to be working with one-on-one. And it's just a much better system overall for the clients and for the agents themselves, because they can wake up every day and do what they're good at. They can do the job that they're they feel accomplished in. Not everybody wants to go drive around all day and try to pitch a program. Not everybody wants to sit at home all day and work on their computer and just do paperwork and admin stuff. But they're ones that do like that role and like those two duties. They're going to wake up every day and be happy to go to work and not dread having to come home at 7:00 at night and put the kids to bed and then get on their computer for another 3 hours and just do paperwork and all that. It's
and the other thing is about personalities. We're giving you guys more of a people with different backgrounds that can relate to other people and make it a really great experience.
Yeah.
That's our goal.
Agree.
I love it.
Yep.
Well, I want to thank everybody for joining us today, and please come back and join us again next week.